In this video I want to demonstrate how you can use the order book to trade against retail sentiment and trade with the market direction ideally, which is often against what the retail market is sort of aiming for. So an example from this morning. Now you might be watching this a couple of days later, but I had another video already set up for today, which is the 5th of October, so there's another video coming out for 5th of October. So this one's going to have to wait a couple of days, but it doesn't matter, you can go have a look at it all here anyway. So what we were looking at, this is the Aussie dollar. This is where it was at the time. It's much later than this now. I'll forward this on, but we were looking at this sort of pattern. It is a wedge pattern. If you come out to the bigger time frames, you can see at that time it was in this wedge. Yes, it has broken down, but effectively bigger trend, and this is really what I was looking at, is the fact that it's very much in a downward trend. Now this morning we looked at the retail sentiment, and what we saw was the retail sentiment was showing that 66% of position size was on the long side of the Aussie, against 34 on the short side. So immediately there's sort of, okay, traders are getting bullish on this market, and there's opportunity. From there I then looked at the order book, and if I can bring the order book in, I'll show you the order book. Now at the time it was way back. Let's just move this back a little bit. This is the actual orders that were sitting there this morning. So we had, this is the order book and not the positions. I'll show you the positions separately. So we had below price action. We had a lot of sell orders sitting there earlier on when we were looking, and even we got in around about this sort of level here, and it wasn't going to be a big move necessarily, but we'll come back and look at the chart. You can see the sell orders sitting here. Oops, badly drawn, but you can see the sell orders, net sell orders. Blue is buy orders, red is sell orders. So you've got the effectively the market should be looking like this. Underneath price action, you generally have more buy orders, which is the demand, and the supply from the top there. So what we had there was sell orders sitting nicely below price, and even when we were taking a trade, there was the carrot to go. However, it went beyond that. That's one thing, but traders are very, very fickle with their positions, and what we had at the same time was we could see that earlier on there was people in the money. There wasn't a lot of them, but in the money. This is actual positions that were open at the time, the net positioning. So the blues being long, reds being short. So the shorts were out of the money. The blue here below, which was below price at the time, was in the money. So these guys were profitable at that time, and it was going down. It's actually moved slightly, the going back historically, but we still had these buy orders sitting across underneath the current price level. So what we had there is effectively we had a few traders that were bullish and in the money. They were doing okay at that time. They were certainly doing okay as the price was up here. So these guys were in the money. What happened next started to happen. Of course, the price started rolling over, so those that had been in the money would start coming out of the money. What does that cause? Well, it causes often the people, even the earlier traders that have gone into the market, it causes them to panic a little bit, and often we from that we get a downward false effectively, because they panic and they sell. So they start selling. As they're starting to selling, market prices coming off because of demand and selling going on there, and we've got sell orders below, it gives us a real bearish signal to trade. So it's just left down to the technicals. Now the technicals is all I was waiting for this morning. Let me just adjust things. Okay, so I was coming back to the chart. Sorry, I just adjusted things in terms of so you can see what I was looking at the time. So we got the sort of bearishness built up in terms of what the traders are doing. We got these sell orders right down here. Now this line on here is was the S3, so we could have a look at the shorter time frames and see that was on the S3. So if we go down to down the time frame, here we go. So that was those orders were sitting down to this level here. So it gave us a bit of a plan. We'd been sitting in a wedge. This is a shorter time, a 15-minute chart. All I was really looking for on this basis was the potential to short the market, obviously, and go down to the level of the orders there, as far as the orders. Now I was probably being a little bit cheeky here in terms of actually the orders were sitting down towards 64.38 sort of area. We came out at 64.40, so left a couple of pips there. Probably should have left a little bit more. Who knows, this market could continue going down. This is a live market. So what we saw and how we triggered the trade, it doesn't really matter so much, but it was a breakdown of the 4-hourly S1 that actually got us there. We got into the position. If I have a look, I think it was about 9:06. We can have a look on here because I have it on here, 9:16. So 9:16. So about 9:15, 9:16. We got into the position. And that's it. We just traded it and left it, and it's okay. The 4-hourly pivot's changed here, but we just ran it down and left it. So that is a move against it. Now, if you come back to the hourlies here, you watch how it developed and moved, and it was just literally using the sentiment. So the sentiment was overly bullish, effectively, in a very bearish market. And there we go. I'm just going to pause it. Oh, don't need to, it's paused itself. So it's run its way down, and as I said, 64.40 was the sort of area I was looking at, which is not too far from where price is at the moment. I could have left it to run further, but that wasn't the plan. All the plan was to take advantage of these levels. You can see why there were sell orders down here, because if traders are trading this and pushing to the upside, they're going to be putting their stop losses somewhere. So their stop losses were in a logical place below the previous lows, but what was illogical for me was they're trading it against the trend. They're effectively going long, and there was a misbalance in terms of from their perspective was for the long side. Now, it wasn't overly biased towards it. Alongside, we often see 75-80% figures on this. This is FX. SSI.com's site here that you can get this quick sentiment from. You won't get anything else from them apart from a lot of money. So we were looking at this figure here, 66% wasn't particularly high. There's higher percentages, 70% for the New Zealand dollar, but what tied up well here, although the New Zealand dollar did as well, but it's just better for me on the Aussie, was the fact that it was a reasonable amount, but we had the buy orders in the money already, and that, to me, when you've got buy orders already in the money and then you've got a downward trend and it sparked off on the downside, it made for a decent opportunity, as I say, to go short there. So it's really just playing, so and nothing more. I mean, it's really come down to its the previous S3 and down a little bit more maybe, but that was the purpose behind the trade. That's how we can take advantage of those that panic and close out quickly, plus the stop losses that are sat there previously. So it's all about taking the look at, as I say, checking the order book, seeing what's going on, and then taking a go with. No great amount of pips in it. It actually gave me, with a risk reward, 1.3 return, so it wasn't a fantastic return, but it had a very good probability, and I don't really mind if I got good probability to take the trade. Remember, the long-term trend was downwards. The retail traders have been trading this to the upside. It's a messy old chart, to be fair, on the 60 minutes, 4-hourly, it's consolidated. Other markets, the euro, etc., have pushed up a lot more, so they look a lot stronger. The pound, the Aussie is just a weak player, so you've got to look for the weakness. We had a pivot swing there on the hourlies just prior to the trade being taken. We had a trend break and everything fell in place for the short side. So that is how to trade and look at the sentiment. The order book is my own order book on my own website for members area, but as I say, the FXSI gives you the retail sentiment, or you can get retail sentiment from a lot of brokers these days. They'll show you their own positions. That is pretty much it for me. I hope you find this video useful. Take care. Bye for now.